I think, as you alluded to, the fund managers' gear plays on the stock market. When the stock market's flying, they do very well. Their assets under management grow. They take a fee of those growing assets under management, and they make huge margins. And what they should then be doing is paying out massive dividends to their shareholders, because in anticipation of when markets turn down, when they might not be delivering those kind of returns. And fund managers have really been on the floor lately. Polar Capital announced this week, and last week had Impacts Asset Management as well. They're all announcing quarterly numbers for March. Polar Capital's, done pretty well. 12% growth in AUM in the quarter to the end of March, 1.9 billion. That's pretty good.
Hello and welcome to the Investors Champion podcast. The goal of this podcast is to give you a quick but informative rundown of some interesting topics affecting UK investors and a rundown of the biggest movers in the UK share market, including AIM and some bonkers bargains for you to take a closer look at. Let's get started. Hello Chris, good to see you again.
You as well. Another busy week. Lots to talk about.
Yeah, as always. And unfortunately, we're going to start with some not exactly ideal news. The UK economy only grew 0.1% between January and February, which is hardly earth-shattering, is it, Chris?
I mean, they're rounding errors, aren't they? And they seem to come out of the fact that we've avoided recession now, in line with expectations, thanks to growth in manufacturing, especially in utilities, they're saying. Wow, it's pretty minimal numbers, aren't they? They're barely worth mentioning, but the data watchers like looking at these kind of things, and we've got to follow them. But at least it has grown, it hasn't gone backwards. So there is a positive, at least. So there's not much more to say really on that one.
Yeah. What did you think of the news of the CEO of Shell threatening to leave the London Stock Exchange? And I'm paraphrasing here, but citing differences between the valuation of Shell on the London Stock Exchange versus the valuations of Chevron and ExxonMobil in the US. What was your thoughts on that?
I'm not surprised, really. I assume he thinks life might be more appealing. He might get a better hearing for the company out there. Clearly, there is a valuation discrepancy. All London stocks are underwater. London shares look very cheap. They have looked cheap for the last 10 years, but that hasn't changed. The London Stock Exchange itself is doing absolutely nothing, seemingly, to help the promotion. We haven't seen it. It's not that visible. I assume there's talk going on behind the scenes. But yeah, I'm not surprised. And it's interesting that clearly some of those companies have stuck to their fossil fuel roots, remained steadfast to those, and actually now are getting rewarded for it. They haven't really adopted the green agenda that some of the UK listed ones have.
Yeah, that's an interesting point, actually, isn't it? Because he says that he feels that, and I'm paraphrasing here, but he feels that his company, or Shell, is undervalued on the London Stock Exchange compared to, say, Chevron or Exxon in the US. But I wonder, is that based on the malaise we're seeing in the London Stock Exchange, or is that because of the business decisions that Shell and his company have made into the green energy sector versus Shell and Exxon, who definitely didn't go into that area, did they?
They
stuck to their guns.
And you're right. And they were criticised at one point, and a lot of big fund managers kept them off their selection list, but they stuck to it, and now things have gone full circle, and the green agenda is, well, off the agenda on in many US states. But yeah, Shell, the capital investment discipline a few years ago was horrendous, and the wastage was terrible, but they seem to have buckled down, and it's greatly improved. But their shares have done all right, have been doing okay, as have obviously all the US ones. With the oil price riding high as well, they're going to be absolutely minting it. They're going to be making a lot of money.
Yeah, it's worth just adding, I should have added this at the beginning. Shell is also the biggest company by market cap on the UK stock market.
It's a giant. And it's
quite significant, wouldn't it, if it did decide to leave?
It'd be huge, because it'd be in everybody's pension funds as well. How could that change the sort of weightings in pension funds? Would they be influenced by that, the change of listing to... It's an interesting one, so for sure. Crazy news.
It is, yeah, certainly. I thought it was definitely worth a mention. Gold as well, again, we've mentioned this a couple of times now. The gold is absolutely flying high, isn't it?
Yeah, gold, just shy of $2,400 an ounce, up 15% year to date. It hasn't quite performed as well as Nvidia and Microsoft and the rest of them, but it's absolutely flying. There was a report I heard, 271,500 Google searches for gold in the first 3 months of the year, most popular since the fourth quarter of 2020. So really, gold's really back in the interest arena, everybody. And China buying up a lot. It's one of a number of central banks buying gold. Clearly, it's a safe haven. You've got a lot of trouble in the Middle East. But are we at the era now of over-exuberance in gold? And I read also in this regard that Costco, this is the warehouse group Costco, the wholesale membership chain, is apparently generating $100 to $200 million a month selling gold bars.
Wow.
selling
Yeah.
gold bars. So it's not it's unbelievable. And this is from September. It started selling them in September from about for $2,000, and its pricing is really competitive, apparently. But it's not adding much of a margin, as Costco doesn't add much of a margin. And I think as well it leads to, I think Costco as a business model itself, ignoring gold, I think those that are interested in investing should really have a look at Costco's business model. It's absolutely fantastic. Costco is known for operating all these warehouses, 875 warehouses around the world. So that doesn't sound that many, but they're huge. 603 of them are in the US. The quality of the business, I thought, is illustrated by the fact that Charlie Munger, Warren Buffett's late partner, the late Charlie Munger, was on the board of Costco,
Mm.
and clearly he liked the business as well. But it's really the margins they make. So you can't believe that a company making such slim margins makes money, but it makes absolutely loads of it, because the secret of Costco is its membership. It collects these membership dues from its millions of members every year in advance, cash in advance. Costco's membership fees for $4.5 million out of its operating income of 8.1 billion, 4.5 billion, sorry, out of 8.1. So more than half of its operating income is simply made from membership fees, which are clearly really high margin. And it's got 130 million members.
Just clarify that again. Sorry, 4.5 billion in membership fees.
It collects $4.5 billion in membership fees.
So more than half comes from just membership
Yeah,
fees.
its sales are $237 billion of sales, and it only makes 8.1 billion on that, which is just 3.4%. But it's got just huge, very basic warehouses. Overheads are kept to an absolute minimum, so no fancy buildings, salespeople, there's no delivery. Everything is basic. The tills, everything is really to the bone. But to have the privilege of shopping there, you've got to become a member. And you have corporate members, different levels of them. And so, despite making only tiny margins, 3.4% operating margin at the bottom, which is better than Tesco's, for example, at 4.1%. So Costco make a greater operating margin than Tesco, but their return on equity of Costco is 28%. So they're making more out of their assets. They're making greater returns on capital, far greater than Tesco on capital. Tesco's return on equity is only about 15%. You wouldn't believe it looking at it, that a business selling things for such minimal margins can be so efficient and such a great generator of return on capital.
The membership fees have just absolutely blown me away, really. That's incredible, isn't it? But
130 million members they got around the world. 130 million. To put
yeah,
that into context, I've looked at this. The biggest pure membership organization in Europe currently at the moment is apparently the National Trust. And that's got, I think, about 5.3 million members. Costco's got 130 million.
oh, wow. That's incredible, isn't it? That really is
Yeah, yeah,
incredible. Aldi's kind of crept into the UK supermarkets and really took a big chunk out of Tesco's customers.
yeah.
And Tesco's gone really down the online delivery route. If you use a Tesco's, you'll often see Tesco workers walking around, picking stuff off the shelves, loading them up into the trays ready to deliver to people's front door. And I just wonder which side of this quite visible battle is going to win out. Because Aldi doesn't do the delivery. Costco doesn't do the delivery. Yet I would say Tesco seems to be going down that road. They think delivery is going to be a big thing. People order it online, pickers pick it, and it gets delivered to someone's front door.
Yeah.
Or is it going to be the cheap, no frills warehouse that Aldi has kind of got, but not maybe
It's a
quite
bit,
as
a
much
bit of
as
a
Costco?
halfway, isn't it?
It's
Yeah,
a halfway,
yeah.
isn't it, Aldi? And Costco's full bought warehouse, pallets of stuff. You walk around, no
Dirt
frills,
cheap, and you could
dirt
pick up an
cheap.
amazing bargain from a whole.
Yeah,
It could be tires one week, steak the next, wine.
yeah,
Suddenly you see something that's half the price that it should be. It's just but you going back to the first topic, oil companies.
mm,
ExxonMobil stuck to their knitting, really.
yeah,
Then they focused on what they were good at,
yeah,
and weren't distracted by things that they maybe thought they shouldn't be involved in or wasn't for them. Costco as well is very firmly stuck to its guns, isn't it?
mm.
That concept, membership, very low margins, low cost products, no frills kind of thing. It hasn't really changed a lot, but I assume its IT systems have improved. It's still relative, it's still very focused, as it always has been, on it and what it does.
Yeah. I guess the question is, Chris, do you think we'll see Tesco selling gold bars next to the
Why,
Yogurts and crisps.
why not? Although again, going back to the over exuberance in gold, I think that might signal the peak of the market.
Yeah,
Yeah,
yeah, that's a fair point, yeah.
yeah, as it may do with Costco.
Should we leave it there and move closer to home? Move to the AIM market?
Yeah, yeah. Let's jump into there because loads of news of another takeover. Lok'n Store Group, the self-storage group, as well, clearly its directors have hatched a deal for the largest self-storage company in Europe called SureGuard to buy them. Premium's only about 60% of the share price before, 378 million quid. It's an AIM company. It'll be a great shame to lose another AIM company like Lok'n Store. We've never held the shares, but it's been a nice steady performer, nice business. Getting a bit frustrating though. Relatively small premium. Couldn't Lok'n Store have been the acquirer rather than the acquired? I know SureGuard's a lot bigger, but clearly it sees an opportunity in the UK. If there is an opportunity, wasn't there an opportunity for Lok'n Store with a supportive shareholder base? So I think it'll be really frustrating to see that one go as well. I mean, we had 3 small caps this week. There were 2 other ones on the main market. One of them got a sort of an approach to interest, but the other one had a pretty firm offer as well. Premium isn't massive. It's just very frustrating. And in the meantime, I haven't got any more new companies coming on board. A real shame.
No, and it speaks volumes, doesn't it? There's so many takeovers going on. There's so many offers going into UK companies. There's obviously value there, isn't there? That these.
Well, there is. And what the strange thing is that up to now, it hasn't really generated any other buying interest. You think with all everybody else, i.e. private equity and as overseas companies buying UK companies, you think they'll encourage investors thinking, well, crikey, everything's good. I should have a piece of this,
Mm.
albeit that maybe the premiums aren't big enough. But yeah, it hasn't encouraged anybody to stick their hands in their pockets and start really buying into these things. Maybe we're close to the bottom, hopefully.
And I guess when you look at gold at all-time highs as well, that's almost a polar opposite, isn't it? People are going
Yeah.
into gold because they're worried about the future, but yet you've got these other companies and private equity buying companies. They're going into.
Private equity are clearly borrowed as well. You know, there's a lot of this is borrowed money as well. They're
Yeah,
using a lot of debt
yeah.
as well. So they see there's an opportunity. Why doesn't everybody else?
Should we move on to a company that really highlights the challenges that companies can face when trying to scale up manufacturing? And this company, Surface Transforms, although the order book, the contracts, they've got a lot of contracts, it looks really healthy, but they seem to be struggling to really scale up their manufacturing processes, don't they?
Yeah, Surface Transforms, it's been a market for a while. I mean, it joined AIM in 2002, and it's trying to manufacture at scale carbon fiber reinforced ceramic brake discs. And it's got contracts with a lot of it doesn't name them, but we know that all the big motor manufacturers, high-end models, and it put in sort of notional contracts and orders to be called off. 390 million pounds of lifetime contract value and another 300 million. So it's got all this potential. It really illustrates, I think, how hard it is for a small company to scale up manufacturing. And this is trying to manufacture, and it's really struggled to scale up. Sales in the first quarter were only £3 million. And I just hope its customers aren't running out of patience. It's also raised quite a lot of money now to execute its dream. We reckon up to now, it's raised a total of about 70 odd million quid. And clearly, just executing has proven really tough. And I think people always underestimate that. They see orders and how wonderful it is. And if you're in software, they can be executed. But if you're manufacturing something quite complicated at scale, it's a really tough job, which is all the more amazing that I think that how well Tesla's done. And it's
Mm,
phenomenal how they've got that business up to scale in such a short time.
yeah.
But even with this little brake disc manufacturer, it's really tough.
I know that's one of Elon Musk's company, but SpaceX as well. I think
It's
SpaceX doesn't get the same limelight as Tesla,
yeah,
but my God, what he's done with SpaceX and
I know.
what him and his team and company have done,
Yeah.
unbelievable,
Oh,
incredible,
it's revolutionized the whole sector. I mean, it's
absolutely transformed it
and
completely.
it's phenomenal how it's as you say, he must know how to choose the right people with the right experience, open-minded to be able to achieve these things, and the determination and probably the rewards in place. Maybe it's tough to get the right people into a very small AIM company who have the experience of big scale manufacturing. I don't know.
Yeah, I remember listening to a talk by Steve Jobs, and he said how they used to really scrutinize the early hires of both Apple and Next, the company that he started when he left Apple or when he was pushed
Yeah.
out. And he said how they would spend weeks deliberating and deciding and back and forth with the existing hires within a smallish team of whether to bring this person on board to join the growing team. And to me, that demonstrated how important it is to bring the right people in to add that value and hopefully move the company towards where it needs to be. And
That's fascinating. That's a really interesting point. You're
yeah,
right. If you get that right base with the right startups, that could move you to a whole new level, can't it?
different level, isn't
Yeah.
it? Yeah.
Maybe, I don't know, give people the opportunity to take risks as well. Maybe
Mm.
get things wrong. Maybe if you're in too safer an environment, that's why it doesn't work.
Yeah, moving to other end of the scale, a company that is executing well in its contracts. It's in a completely different sector in the life sciences space. It's also a stonking small cap, so there's lots more information around this company on the Investors Champion website. And that's Hvivo. It seems to be doing quite well, doesn't it, Chris?
Yep, they're doing really well. So it's a leader in, well, it's becoming a leader in the testing of infectious diseases using human challenge trials. So these are testing products, drug development on humans in clinics they've got, and they're doing really well. They've got a great order book, loads of visibility, so they're fully covered. The way they work is they get a lot of money up front. Cash flow's great. If the customer cancels, there's a big penalty that basically keep a lot of the money. So it's even better margin. Clearly, they don't want everybody to cancel because they don't get the big entail of it. But yeah, they seem to be doing pretty well. They're moving into a new facility in Canary Wharf, an AIM company that's been a great success and one of our stonking small caps, a good performer as well. But it's in really good shape with a decent CEO, seems to have his finger on the pulse as well, and has delivered in spades up to now. But yeah, worth taking a look and keeping an eye on it. Hvivo performed well, but it's still a minnow in a very big, potentially and growing market. Just what you want, really.
Yeah. What do you think of Cake Box? Obviously, coffee shops and food cafes and things like that. They're an interesting area, aren't they? And some companies have done really well. Say you've got Costa Coffee did excellent, but then
Yeah.
you've got the ones that Patisserie Holdings, for example, not
Oh,
so
yeah.
well. So
So
what's your
Sore
thoughts?
Point Patisserie Holdings, we held the shares. Thankfully, it was only a bit of a pinprick in returns in a good year, but
Yeah.
I've always been a bit wary as a result of cake and coffee shops. Cake box isn't like patisserie. It is very much
Yeah, we should stress that it's not the same,
no,
shouldn't we?
no, it is different. It's a sort of franchise model,
Mm.
great margins, and it seems to be growing okay. They've got ambitions to grow. They've got 225 stores, ambitions to grow to 400, which I think looks a bit of a stretch, but that's what they're good to be ambitious, isn't it? They're doing a bit better now. Raw material costs have come down, and they offer a big dividend yield, 5.4% dividend. So the model is nicely cash generative. They pay out a lot. There are a few issues. The accounts weren't up to scratch a few years ago. The FDs, the former FDs, no longer there. There's been a sort of change in tightened up their reporting as well. The shares don't look cheap relative to growth, which isn't huge. They're not growing that fast. Still, I think high single digits, and they're trading at about 15 times forecast earnings, which is quite rich for, I think, in this sector. But they seem to be doing okay. But I've always, for us, the ghost of patisserie holdings has always hung over cakes.
Yeah, I can
And
imagine.
as I pointed out, the barriers to entry on this are non-existent. You and I could, with somebody with a little bit of expertise and knowledge in the sector, could start a cake and coffee shop, couldn't we, next week or the week after, maybe? It's not, the barriers to entry aren't that great in this space, and that is my slight concern. But they seem to be doing pretty well. They're doing pretty well. Good luck to
Yeah.
them.
Moving on to a very sort of different sector here in the manufacturing of energy efficient and low maintenance building products,
Yeah,
windows,
this is,
doors, etc.
yeah, this is the UPVC windows and doors with some other products as well, but that's the most of their work. Yeah, Epwin. I think it could be a classic case of operating in a really unloved sector, construction materials everybody hates. One of its rivals on AIM went out of business, fell into administration. And if you're last man standing in this space, or one of the last people standing, you can do pretty well. And this business, all right, turnovers hasn't been going up. It fell marginally, but profits actually have risen. It makes loads of cash. It's paying a lot of it out as a nice dividend. You get a 6.1% dividend yield. It's actually in our associated fundamental AIM income portfolio, 6.1% dividend. The rating is trading at about, what, 8 times forecast earnings? So if you have a tick up in the sector, we've said how bad the construction sector's been. If you have just a small tick up on it, this thing with its big facilities can really start flying again. And
Yes.
you get the impression it's very well managed as well. Looking at the numbers and how they're reporting, it seems to be pretty well managed.
And shall we contrast Epwin with M&C Saatchi, who has also just released a trading update, and just highlight the difference in reporting? Do you think some simplification in the reporting is needed, perhaps?
Oh, absolutely. It's an advertising and marketing business with a big name. It's had some tough times. It's going through really messy restructuring. And you could have seen this from the numbers. It's got all sorts of funnies in it. Now it uses the kind of marketing speak language that always puzzles me. It has now 4 specialisms. It reports under issues, passions, consulting, and media. Issues and
Passions.
passions. Oh,
How
well,
do you, yeah, how
I
do
don't
you
know. I don't
quantify
know.
those two?
Yeah, I don't know. Clearly, it might sound good. So, but that's one aspect. But you've got to really understand, looking through the numbers as well. What struck me is the huge lease payments. This isn't a huge business. It must be operating in some really swanky space because the lease liabilities were about 50 million quid. It's spending 9.1 million a year on office space, which strikes me as quite a lot for a business like this. Pre-tax profits fell to, well, just real pre-tax profits just about broke even on net revenue down to says 253 million. So it doesn't make much of a margin on it. But yeah, just in a nutshell, accounts are hugely difficult to understand because you also have things called put option payments. Put option payments, 15 million quid in the year, had a massive impact on cash flow. So you've got to have some understanding of put options for starters. But yeah,
Yeah.
hopefully it will survive. It's got a new executive chairman trying to tidy things up, but please keep it simple, stupid.
Maybe they need to take a leaf out of Costco's and go for just a straightforward, nice and simple office space. Get rid of them costs. That will massively improve the
I tell you what,
margins.
I dread to think what Costco's head office looks like.
There certainly won't be slides and fancy coffee seating
You probably
areas,
have
I
to pay for a
imagine.
pencil or a pen, I would have thought.
Yeah.
So, yeah, no, it is a lesson. But yeah, at
Yeah.
different ends of the spectrum as well. Advertising, marketing, they clearly like the glamour a bit more.
Yeah, I suppose when they get new clients coming through the door, first impressions and all
Yeah,
that
yeah,
lot,
yeah,
it
yeah.
is a
It's a
different
different ball game
ballgame.
in
It
this,
is,
in
in
fairness, yeah.
fairness.
But it's the put
Yeah.
option bit totally confuses me. But there you go.
What about Treatt? Quite a popular company amongst private investors. Why is it so expensive?
Yeah, it is. It is one. It's a manufacturer of natural extracts and ingredients for beverages, flavors, fragrances industries. Years ago, I visited their premises actually in the
Oh, right.
east of England. I actually went to their old one. They've moved since.
Yeah.
I went there and small cap. It's not a name, small cap, but the shares always look pricey for me. And it's put out a profit warning a few months ago. The shares have fallen off. It looks, but they perked up a bit this week, 13% on better news. So I looked a bit closer. I thought they still look expensive. This rating looks expensive for a business that isn't really growing that fast. It doesn't tick all the boxes, high returns on equity, high returns on capital employed, big operating. It's all a bit ordinary in my mind.
Mm.
So I thought I'd look at one of their listed rivals, Swiss listed Givaudan. I think you pronounce it Givaudan. Their rating is twice as high as Treatt's. It's a 32 billion pound company, Givaudan, and Treatt's is in the hundreds of millions of pounds, so 280 million circa market cap. So this thing's multiples bigger. It's also not growing very quickly. Its return on capital is a bit more encouraging, but again, it's not earth-shattering, but its rating is stratospheric. It's trading on a 36 times forecast earnings, which is almost double Treatt's. And I think the other rival as well, listed rival, I think there's a US one, is also very expensive. So maybe I'm beginning to see this whole is pricey. You need to be able to pay up for it that way.
Yeah, so this is maybe a cheap company in an expensive sector. Maybe.
Yeah, maybe. I think they're pretty good. They do well. Hopefully they've got through their problems and yeah, worth looking at.
Just thinking in my own mind there, what you've done there is you've compared a company that looks expensive, but you've compared it to the other companies in the same sector. And then you've come to the conclusion that actually, all right, they're all expensive. They're all at a premium.
Yeah.
Perhaps maybe companies who use these products, they pay a premium for the products that they supply. And that's an interesting insight in
Yeah, no,
my.
it is, and I think you've said as well. You need to look. Anybody can buy shares anywhere in the world now. You can. It's easy. You've got platforms that you can buy a US stock, a Japanese stock, a Swiss stock, a French stock. I know I'd like to support the UK market, but it should stack up. It should be appealing. And so look around, open your eyes. It's so easy now. And
Mm.
clearly, there are different attributes to these businesses. But look around, and you might find the UK companies cheaper in this instance. Or you might think, wow, this is really highly valued compared to this thing I can buy in the US for a fraction of the valuation. Yeah.
I always like to finish the podcast on a bit of a high, bit of a positive, and there is an area or a sector that you've identified that could be worth looking at, providing that we're at the bottom of the cycle. And of course, nobody has a crystal ball, so we don't know when that is going to be. But that's the area of fund managers, and in particular, POLR Capital, that's just released a trading update. And, fund managers, they're like geared players, aren't they, on the stock market? When the stock market's rising, the fund manager companies do really well. And of course, when the stock market's falling, they don't do as well. But you do usually get a healthy dividend. You're kind of paid to wait, which is exactly what POLR Capital is doing with its dividend.
Yeah, it's a fund manager. I think, as you alluded to, the fund managers gear plays on the stock market. When the stock market's flying, they do very well. Their assets under management grow. They take a fee of those growing assets under management, and they make huge margins. And what they should then be doing is paying out massive dividends to their shareholders, because in anticipation of when markets turn down, when they might not be delivering those kind of returns. And fund managers have really been on the floor lately. They've been under pressure from passive funds. They've been under pressure from poor returns. If they haven't been in the ESG space, they're struggling. POLR Capital announced this week, and last week had Impacts Asset Management as well. They're all announcing quarterly numbers for March. POLR Capital's done pretty well. 12% growth in AUM in the quarter to the end of March, 1.9 billion. That's pretty good, 21.9, 12% growth. But there was a net inflow of funds. So this wasn't just stock market growth. This is growth in new money coming in, net inflows, allowing for outflows as well. And apparently the positive momentum's continued into April 24. It's a specialist manager. I think there's still a room for specialists. And for POLR Capital, the dividend yield was nigh on 10% a few weeks ago. Now it's still 8.5%. So you're really paid to wait here. So it just shows you can sit with these, collect a nice dividend, wait for the cycle to bounce, assuming they still have a position. And I think POLR Capital as a specialist, very strong in the technology sector. So I think around about 40% or a bit under of their funds under management are technology-related funds. So that's their specialism. Clearly, they're doing well at the moment from that. And yeah, nice business. But I think the others could follow. Look for the fund managers. Some of them are so cheap, and the business models are good. Great returns on equity from them. Pretty low cost. It's all people. Not much capital expenditure needed. So yeah, look at the fund managers when all things are looking terrible. Collecting a nice 8.5% dividend. That's what
While you're waiting.
Absolutely. Paid to wait. That's what I love.
Paid to wait. Shall we leave it there, Chris?
Yeah, that's great. That's great. Good speaking to you again.
You too as well. Take care. Have a good day.
Thanks. Bye.
Well, that's it for today. Please subscribe for next week's episode, as we will once again discuss global events, the UK share market, and some more bonkers bargains for you to take a closer look at. If you want to take a deeper dive into any of these topics, and indeed more exciting and interesting companies, then please feel free to visit investorschampion.com to learn more. All the links are just in the show notes just below. Many thanks for listening, and we hope you have a great day.